Welcome back to Market News, your daily roundup of the stories shaping American markets. I'm your host, and Thursday, July 20th, 2026 is the date you're listening to. Today's headlines tell a story of an AI infrastructure arms race that's showing no signs of slowing, a crowded earnings calendar with the big boys about to report, and geopolitical friction in the Middle East that continues to ripple through the travel and energy sectors. Let's get into it. The biggest story of the day, and honestly, we could have picked any day this month and it would still be the biggest story, is the relentless acceleration of AI and cloud infrastructure spending. AMD stock jumped today on news of an expanded deal with Microsoft. We've been covering how these partnerships are the new normal in the tech world, and this latest expansion just reinforces it. Meanwhile, Nvidia itself was busy expanding its agent toolkit, helping AI agents build physical capabilities for real-world applications. That's the distinction, we're moving from AI that just answers questions to AI that can physically interact with things. That's the frontier they're racing toward right now. Meta was not about to sit on the sidelines. The company hired a former AWS executive to strengthen its cloud push. And let me tell you, that move deserves more attention than it's getting. Meta is essentially building a serious cloud infrastructure play, and they signaled how ambitious they are with a $12 billion BlackRock-led financing package for new data centers in Texas. Think about that number. $12 billion. That's the scale at which Meta is now playing in the infrastructure war. Alphabet, meanwhile, gained on reports that Google is working on new server chip development. So the four pillars of this narrative line up: AMD, Nvidia, Meta, and Alphabet, each competing, each complementing, and each pouring billions into the same infrastructure build-out. Microsoft investors, according to BofA Securities, are closely watching Azure growth and capital expenditure levels going forward. So the question on Wall Street right now is what level of spending by these hyperscalers is justifiable, and where the inflection point comes in between investing and returning value. The Nebius story is illuminating here too. That company secured a $775 million debt deal, and analysts are saying it fundamentally changes the growth narrative for AI infrastructure companies in this space. Now, let me add a note of caution here. Cathie Wood, of all people, reportedly dumped $39 million worth of AMD stock. It's worth noting that Cathie Wood sells into strength regularly by design. Her entire strategy is built around it. But the fact that even the most bullish voices on AI are seeing profit-taking opportunities speaks to where these names might be trading sentiment-wise. Moving into earnings, this is the busiest day of the week for corporate reports. Tesla is preparing to deliver Q2 results, and it's worth noting that the company announced a 20% production increase at its Berlin plant heading into the numbers. So we have the operational context alongside the financial report. Microsoft investors are watching Azure growth and capital expenditure levels per BofA. Netflix just reported, and analysts are split on whether the stock is finally a buy, and Meta is projected to beat Q2 estimates driven by ad growth and AI benefits, BofA says. The consumer side is relatively bright. Disney is expected to post double-digit EPS growth per UBS, and Coca-Cola's growth outlook remains strong ahead of its Q2 results. On the other side of the aisle, Procter & Gamble investors are bracing for a shortfall in fiscal Q4 organic sales, and F&B continues to face net interest income headwinds according to BofA. AMC stock surged on record revenue, with its CEO pushing back hard against what he called the prognosticators of doom. Netflix's recent earnings report has left the analyst community divided on valuation, and regional gaming companies are set to post Q2 upside according to BofA. There's also a notable development in the biotech and tech intersection. Tempus AI acquired Personalis for $1.5 billion even as Tempus shares fell. Sometimes the market sells the news even when the deal is strategically sound. And on the M&A side, Brookfield and CPP Investments are set to acquire LXB. Salesforce continues to be described as a cash gusher at a markdown price, and Apple is reportedly sidestepping what some see as an AI spending bubble, so the debate over whether we're in an infrastructure mania or a measured build-out is very much alive right now. Now let's pivot to the geopolitical and energy thread because this is where the macro risks are converging. Oil prices whipped around today on Iran diplomacy hopes and Houthi threats. The whipsaws in oil markets reflect the whipsaws in diplomatic signaling, and that uncertainty translates directly into energy costs and ultimately consumer pressure. Ryanair's profits dropped 34% because the Middle East conflict is hitting summer travel demand hard. That's not a small number, that's a massive demand shock for an airline that depends on European connectivity. Ryanair's stock and the broader airlines complex, RYICL, are the tickers to keep an eye on as this situation unfolds. SpaceX moved its Starship launch to Thursday, so we'll have space news to follow, and Nvidia-related iron stock soared today, continuing the theme of infrastructure and AI intersecting in markets you might not expect. If we take a step back and look at the technical picture for the market as a whole, the signal is pretty stark. An analysis of just over 10,000 stocks returned only 6 bullish signals versus 44 bearish. That ratio tells you that the technical setup across the broad market is overwhelmingly negative despite the individual names that are doing well. The top gainers list was led almost entirely by small cap and penny stocks. P.S. New York, PCE surged 133%, S. gained 77%, and SLND jumped 67% on massive volume. On the other side of the tape, TPC was the biggest loser at -78%, followed by VIVC down 47% and Stack down 46%. This kind of divergence, where the largest gap quality names are consolidating while speculative small caps and penny stocks make the moves, tends to suggest a market that's not broad-based. The most watched large-cap names on volume today were Nvidia at 144 million shares despite a 2% decline, Netflix at 142 million shares down more than 7% after earnings, and Intel at 126 million shares. That Netflix volume alone tells you the earnings report moved the needle significantly, and the fact that analysts are split on it says how difficult it is to value streaming growth right now. On the silver and gold front, Silver Hammer announced acquisitions of Stroud Resources and Silver Mark Resources with brokered financing, and Eric Sprott is set to become a cornerstone shareholder. Silver and gold are seeing their own narrative play given the geopolitical backdrop. Let me close with 2 more name-specific observations. Dan Ives is maintaining his sky-high target on IBM even after its largest crash ever, which remains one of the more contrarian calls on the street. Wowza deployed a synthetic video detector with Nvidia, a partnership that speaks to the growing concern about deepfakes and AI-generated content. And Netflix stock, once again, is the most contentious consumer name in the market right now. So let's recap. The AI infrastructure narrative continues to dominate both the news and the investment thesis, but the technical breadth is weak. Earnings week is delivering mixed results. Tesla, Meta, Netflix, Disney, and Coca-Cola all have stories to tell this week. Geopolitical friction is pricing itself into energy and travel. And the divergence between quality names and speculative small caps is the kind of market structure that usually precedes either a broader rally or a deeper pullback. Neither has arrived yet. That's all for today's market news. Thanks for listening. We'll see you tomorrow.